So in this uncensored trading episode, I want to take some time up to explain more advanced stuff. So I'm going to talk about advanced break-off structure, which is basically how I identify the correct breakouts and break-off structure. So it really only comes down to two principles which I use to identify this break-off structure. What counts as a valid break-off structure? So without further ado, let's get right into it. So for those of you guys who understand market structure, you will know that price will never just go up in a straight line like this. No, price has to go up, retrace a little bit, go up, retrace a little bit, and go up and retrace a little bit, creating your higher highs and higher lows. So this lesson, I want to discuss more about break-off structure. So what is break-off structure? So like I said, uptrend price is creating your higher highs and higher lows, and it will look something like this. And you can see right here, this is our first break-off structure. Basically when price break through the previous higher high to create a new high, right? So you can see this was the last higher high, and right now price has just broken the previous high. So this is the first type of break-off structure. The second type of break-off structure is when price come down and break the previous low, or rather the entire market structure. So you can see right here, when price goes down, it actually went down and break below the previous low. This is the last higher low, and price has just broken the last higher low right here. So this is the second type of break-off structure, and when you see this type of break-off structure, most likely this trend is going to reverse and price is going to head back down and it's going to reverse to become a downtrend right now. But we cannot assume that price is like immediately going to become a downtrend right now, because sometimes, even though price break through the last low and creates a break-off structure, this can still be a fake out and price can still continue going up, creating a higher highs and higher lows like this. So the question that you all must have is, what constitutes as a valid break-off structure? Like, what if this scenario happens over here? So in this case, how do we prevent that, right? What is a real break-off structure that tell us that price will definitely go down after price break out, or price will definitely go up after price break out? Because sometimes, like I said, there's going to be fake outs and price can just easily poke its head through the high a little bit and then just go back down like this. And then this will be a false breakout, though that is not a valid break-off structure. So, like I said, it really only boils down to two principles which determine a valid break-off structure. So the first thing you want to look for is actually this thing called your impulse close above or below. So you want to wait for the next candlestick, right, that is formed after price breakthrough that particular high or low to close above it. So right here, you can see right here, when price break through the last high, right, the candlestick that is formed somewhere right around here, when price break through the last high, it should close above the previous high. This line right here, it should close above it. The candlestick should close above it. On the other hand, when you look at the second type of break of structure, when price break below this low right here, the candlestick that breaks it should close below. Okay, it should close below this low right here. I know it might seem a little bit confusing and you guys might not be able to visualize right now based on this drawing alone. So don't worry, I'm going to show you guys on the charts later. Now that's the first principle which governs a valid break of structure. The second principle is that it has to hold at least 3 candles. Okay, what I mean by that is that when price break out of that key level, there has to be at least 1, 2, 3, at least 3 candle. Okay, once price gave us at least 3 candle and he have closed above the high or the low or below the low, then that is a valid break of structure. So basically the principle is that we want to avoid those false breakouts where price basically just break out and then break back in. So these are what like I say, what we call fake outs, right? Basically when price like break out of a level like this and then just poke its head back in. Okay, a valid breakout would be something like this, which it doesn't just poke back in. Does that make sense? Now let me show you guys some examples on the charts. So you can see right now, these are the 2 principles which govern a valid break of structure, right? So let's identify the trend first, and you can see that right now price is in an uptrend, creating a higher highs, higher lows, higher highs, and higher lows. So it's a very nice uptrend. And this is the last high. This is the last high. So price right now has just broken the high right here to create your new higher high, right? And is this a valid breakout? If you look at what happened right here, right? Price actually break above this area here, above the last high, and the candlestick actually closed above it, right? So there was actually an impulse close above it. So the first criteria, check. Second criteria is that it has to hold at least 3 candles. So did it hold at least 3 candles? 1, 2, 3. At least 3 candles right here. So this tells us that this was a valid break of structure. So if this is a valid break of structure, that means price is most likely going to continue to go up, and you can see right here that is exactly what price did, right? Price continued to go up and up. And then over here you can start seeing price creating your new higher high and higher low and new higher high, and this low is actually lower than this low right here. So in this case there was a break of structure at this point of time. And look at this. This is exactly what I call a false breakout, a false break of structure. So this is not a real break of structure. Why? Because based on these two criteria that we have here, look at what the candlestick do right here. When price break through the previous low, this is the last higher low, right? And right here, price is broken past the last higher low. So was there an impulse close below the level? I mean, is it really an impulse close, guys? I would say this is not really a nice impulse close, but what if, let's say that you think this is the impulse close. Okay, let's just assume that this is the impulse close. Then the second criteria is that it has to hold at least 3 candles below this support level. And it has absolutely failed this criteria, right? There was no 3 candles below this level right here. So there's no at least 3 candles. So this is a false break of structure. And you can see after price did this, price actually went back up and continue going up before it finally come down to break that low right here, and it actually like gave us nice 3 candles right here. So this was more of a valid break of structure, and this is the false breakout, and this is a valid break of structure. Now another point that I want to add is that you should only apply these principles to the time frame that you are analyzing the market structure on. So what I mean by that is that right now we are looking at the market structure on the 4-hour time frame. So since we are analyzing the market structure on a 4-hour time frame, these two criteria will be used to determine whether it is a valid break of structure on the 4-hour time frame. That means that you cannot analyze the market structure on the 4-hour time frame, but then you go to the 1-hour time frame to apply these two criteria. It does not work that way, okay? So here's what I mean. So I can see 4-hour structure, price did this, valid false break of structure, right? So let me just go back in time. Look at that false break of structure. And then right now, we go to the 1-hour time frame. Let's say we went down to the 1 hour or maybe the 15-minute time frame. So after we went down to the 15-minute time frame, right, we see like, did price fulfill these two criteria? Yes, there was an impulse close below the low. Okay, this area right here, there was an impulse close. Nice, it fulfilled the first criteria. And did hold at least 3 candles. Yes, it held at least 3 candles right here. So based on this, if you apply these two principles on a 15-minute time frame, and they are actually fulfilled, right? They are actually fulfilled. So you might assume that this is a valid break of structure. But then bear in mind that you actually analyze the break of structure on the 4-hour time frame. So you should be applying these two principles on the 4-hour time frame, right? Right here on the 4-hour time frame, instead of going down to the 15-minute time frame to apply those two principles on the impulse close and hold at least 3 candles. So that is exactly what I mean by only apply these principles to the time frame that you are analyzing the market structure on. So if you are analyzing the market structure, you are looking for higher highs and higher lows, lower highs and low lows, break of structure on the 4-hour time frame, apply these two principles on the 4-hour time frame. However, if you're on the 15-minute time frame looking for your break of structure, like maybe there's a break of structure here, or there's a break of structure somewhere right around here, then that is when you can apply those two principles on the 15-minute time frame. So make sure you take into account this principle. If not, you're going to end up losing a lot of money because you have all your time frames jumbled up all over the place, and there's going to be a lot of fake outs. Like you see right here, if you counted this as a valid breakout, right, the next thing you know, price actually went back up and guess what? You will have gotten faked out and lose a whole lot of money. I believe that that is the reason why a lot of you guys get confused when you are trying to identify the market structure and break of structure. It's because of those two principles that I just mentioned, and some of you guys are using it on the wrong time frames, etc. So let me try to clear things up for you guys. So for me, this is how I do my top-down analysis. I try to get the directional bias on the 4-hour time frame, and then I go to the 1-hour time frame to look for an area of interest, right? And then I go down to the 15-minute time frame to look for my sniper entries. So the 15-minute time frame will be the time frame that I'll be entering my trades on. So very simple. Look for a directional bias on the 4-hour time frame. So I can see the 4-hour time frame. That is where I want to identify my market structure, right? So maybe let me give you an example right here. Let's look at this. Right here, price is creating your lower highs and lower lows, right? Lower highs, lower lows, lower highs, and lower lows. So in this case, there is a break of structure here. There is a break of structure here. So now that you have kind of like identified the market structure, you see that price is creating your lower highs and lower lows, lower highs and lower lows. You know that right now we are in a downtrend, so we should be looking to sell, right? And then next, you can go to the 1-hour time frame to mark up some area of interest, right? So area of interest could be like this area right here, etc. That's basically area of interest. You can mark up your support, resistance, supply and demand, whatever they are. You can just mark them out in the 1 hour. And then 15-minute time frame, that is when you want to enter for the trade, right? So in this case, do not be fooled, because even though we are entering on the 15-minute time frame, we have analyzed the market structure on the 4-hour time frame. So based on that, remember, we are going to be applying our two principles on the 4-hour time frame. So if you look at these two principles right here, when there's a break of structure, look at this. Was there impulsive close below this low right here? Yes, there is. The candlestick actually closed below it. And then was there at least 3 candlestick minimum? Yes, there is at least 3 candlestick minimum. So easily, you could have easily went down to like either the 1-hour time frame or the 15-minute time frame to look for your entry when this happens, right? Easily look for your entry, enter for a sell. Place your stop loss above this last lower high right here, and then place your take profit at the next key level, which could be like all the way down. So this lesson is not really about entries and how to actually enter for the trade, etc., because that will be maybe for like the future lesson or something. This lesson, I just really want to take some time out to cover more about like market structure, break of structure, and all that stuff, right? So yeah, that is exactly how you guys can identify the correct break of structure, because I understand that a lot of you guys are still confused on market structure and break of structure, because sometimes the charts can be very messy and you won't be able to identify whether it's an uptrend or a downtrend. So by doing this video, I hope that this has really helped you guys out. Welcome to the Uncensored section. So in this section, I want to talk about how the quote, "New Year, New Me" is bullshit. I know that it's 2023 and a lot of you guys probably have New Year resolutions. You guys may have goals that you want to hit this year, right? You guys might want to make 6 figures from trading. Or some of you guys might want to start a trading YouTube channel and be like the trading geek. Or some of you guys might want to achieve your freedom, your dream life, your financial, your time, and your location freedom. And I'm here to tell you that 90% of brokies set goals they never hit. So this New Year, New Me is absolute bullshit. You know that friend who set a New Year resolution to actually get a shredded body, to get a nice, fit, strong body, and then he start going gym regularly for maybe 1 month. For the first month, January, he start going to the gym twice every week. And then in the February, he start slacking off and he start only going maybe once a week. And then in March, he just entirely stopped going to the gym at all. So that is why a lot of times in January, the gym is super packed. There's a lot of people. But once it reaches June, July, October, November, you can start seeing like the gym starts becoming more and more empty. So why does this happen? This happens because a lot of you guys are setting the wrong goals. And when I say that 90% of brokies set goals they don't hit, does not mean that you guys should not set goals at all. I would still highly recommend you guys to set goals, because I personally set goals and I actually went out to achieve them, right? Like I mentioned in my last video where I talk about how I set a goal to reach 100k subscribers in 2022 and also make 6 figures from trading, and I've accomplished both of them. So setting goals is still very, very important. And I always tell you guys to set a goal to make $10,000 per month first. And then once you hit that goal, that is when your life changed forever, right? So like I said, I still remain firm on that. Setting goals is the most important thing you can do in 2023. But instead, what I want you to do right now is to focus on your daily actions. Let me repeat myself. Focus on your daily actions. It's what you do compounded every single day that matters. If you look at all successful people, they have a routine. They have a morning routine. They have a daily routine where they do the same boring thing over and over again. And by doing that, they are able to become very, very successful over time. Just by doing the same old boring thing over and over again, like reading books, sleeping early, having good quality sleep, meditating, journaling, working out every single day. All of these simple habits, when you do it every single day, you won't see the effect 1 month, you won't see the effect the next year or so, but you will see the effect in the next 5 years. You will start seeing your life actually change for a better change for the better over the next 5 years, over the long term. You'll start feeling more happy. You'll start feeling more fulfilled. You will start feeling more peaceful. So in 2023, yes, you should set goals. But more importantly, I want you to start focusing on what you are doing on a daily habit, on a day-to-day basis. Okay? Are you journaling down your trades? Are you following your trading plan? Are you backtesting your trading strategy? Are you using the right lot size when you are trading? So all of these tiny little things, they all add up, okay? They all add up and compounded. So if you keep on doing the same bad habits over and over again, like I said, it's going to compound too, right? You're just going to end up losing more and more money. So if you ignore your trading plan, you revenge trade, you overtrade, and you don't change them at all, you just continue doing them over and over again, guess what? You will never ever become profitable trader. Okay, that is just the whole goddamn truth. So focus on your daily actions. Think about what professional traders do on a day-to-day basis. Oh, what would the trading geek do before his trading? What will he do after his trading? What will he do during his trade? Oh, the trading geek backtests his trading strategy, marks his charts up for success before he trade. Oh, the trading geek move his stop loss, take partial profits when he's trading. Or the trading geek, after he's done trading for the day, he will journal down his trades. All of these habits are what professional traders, professional millionaire traders do. And that has allowed them to achieve a whole lot of success. Like I said, the secret to becoming successful is to follow people who are successful at what you want to do. So if you want to learn how to trade Forex, just follow someone who is already successful at trading Forex and emulate the way he thinks. Do the things he do. Think like him, think like he do. You know what I mean? Like, it's really just that simple. But at the same time, it's simple but boring. I mean, it's simple and boring. That is exactly why a lot of you guys are not doing it, because a lot of you guys are still goddamn looking for the quick fix. You guys still want to look for that perfect trading indicator that will make you rich, that has a 100% win rate. It does not exist. If you ask any professional traders, you will know you have two choices, okay? Either follow your trading plan or lose. Very, very simple. So starting from today, I need you guys to plan your time wisely. Plan. Put down a list of things that you should do every single day that will allow you to reach your goal. Okay? And by taking this small step every single day, it actually adds up. And then that is how you can actually finally reach your goal. So what you can do is to create an actionable plan that you can do daily. And like I said, you will have a higher chance of success by doing this. So an actionable plan could be like, okay, before I trade, I want to backtest my trading strategy, and I also want to read through my trading plan. And then when I'm trading, I want to make sure I'm using the correct lot size. I'm not letting my emotions take control of me, and I'm not staying at the charts all the time like a gambling addict. And after I'm trade, I'm gonna be reflecting and journaling down my mistakes. All of this stuff can come into your actionable plan, right? And then follow this plan. Follow this same old boring plan every single day for 365 days. And I can guarantee you, your 2023 is about to be your best year ever for trading. You're going to make the most amount of money from trading from 2023 if you do the right things. Just like I said in my last video, I said that 2023 is going to be hard. It's going to be a hard time. And as the quote goes, hard times create strong men. So smash on that like button if you have enjoyed this video and hit on that subscribe button if you have learned something, because we are posting uncensored trading episodes just like this every single day. And also make sure you go follow me on Twitter at @officialbradgo, because this uncensored trading episode, I got that idea from my Twitter, like the tweets that I post on a day-to-day basis. And if you are interested on what I do from a day-to-day basis to become a successful trader, you can check out this video right here, where I literally give you a complete step-by-step guide on my daily routine when it comes to trading, how I set up my charts and all that yada yada yada. So remember, you're just one trade away. Mwah.